Hey guys, just a quick recording. I want you to be careful out there and watch out for a possible triple threat at the same time. S&P 500, what we're looking at right now, let's get a longer term situation going on there. S&P 500. So this right here is looking back a long ways. Oh my goodness, I can't see what date that says down there. But this is going back a long ways. Right here is a 2008 crash. Before that, you got all the shenanigans going on. Okay, now, a few months ago, we had Bitcoin reach this top red line, this darker red line. So when we go back in history, we see that this secondary darker red line below the highest red line is not really touched. Then when we get into S&P 500 more recently, we see that it coming out of, now remember, when you have an extreme bottom, we always have overcompensation to an extreme top. That's a time when it crawled along the darker red and barely scraped the highest red, right? Then we look further and we see, let's see. Then we look further and we see when things get above the dark red, they tend to fall. When they touch, they tend to fall. Touch, tend to fall. Then we had, I should make this part a little darker, shouldn't I? Okay. I don't know if you see that yellow right there. That's global net liquidity. So the one time we did climb above the highest red was because we printed money, gave away free checks, all kinds of fun stuff out of the pandemic. And that is what allowed us to crawl above what should not have been touched at all, which is the highest red here, right? So that was a unique situation. Now, global net liquidity is at a very low, yet we are touching, let's just make that look really viewable. Yet we are now very near this highest red. This is a nice warning sign. I did give you guys a little warning sign last time we peaked up above here, but oftentimes what the manipulators do is they'll give you a signal. This was a clear signal. Everybody was talking about this signal as a chance for us to go into a bear market. What the manipulators like us to do is short the whole market on a signal, and then it goes down, bounces back up, and then they don't want another signal to happen for the real drop to occur. And now we're at a point where you're not really getting a signal, but instead it's floating above this highest red, which is a very dangerous zone. So I just am saying, watch out for S&P to have maybe some scary type of drop coming soon. And then let's look at the total three. This is altcoins. Altcoins have reached a highest high, a previous highest high zone, which often can be a bounce sideways. And then in previous video, I shared with you when altcoins reach this blue line here, representing Bitcoin dominance dropping. I drew other blue lines in the past, here and on in the past, showing that so often do we get a rejection on altcoins. A rejection at the same time Bitcoin dominance drops. We get this rejection here. We had a terribly ugly rejection. Let's get a better look. Had a bad rejection, lasted a month. Everybody was buying at the top, just like people are buying at the top now. But we might get this month-long rejection here because we're bouncing off the top, as well as because of lining up Bitcoin dominance dropping. And so everybody buying at this high right here, look out. This could also drop. So we have S&P could be dropping soon. Altcoins could be dropping soon and maybe going sideways or even forming a top. And at the same time, we got Bitcoin. I talked to you in previous videos. Bitcoin went up extra high here because of global net liquidity. We are now at lowest global net liquidity, which is why I told you in past videos, we could actually be at a top. We could actually be at a top. That's 3 things in a row where we have a possibility of dropping at this point. Now, maybe I'm wrong. Maybe Bitcoin will continue up, but I wanted to warn you that if SPX has a big drop, it's going to pull down Bitcoin at least temporarily. It's going to help with the pull down that's already probably going to occur on the alt market.
Likey. Comment. Subscribe now.